Thank you very much. Okay, it works. Good afternoon, everyone. I liked very much the eye-opening session, as she said, because I wanted to say that it's gonna be, I believe, one of the most interesting conversation of the expo. As she said, my name is Nicolette Pálinkas, and I'm leading the group acquiring at Payable. Nice to meet you. And today we are here to discuss who will lead the future of global payments. And the panelists here are representing totally different and fundamentally different models of the payment ecosystem. So they will all answer for the same questions. So without further ado, I would like to ask the panelists to introduce themselves and also to say a little bit more about the company that they are representing. Okay?
So, hi. It's one of the last panels. It's okay. So I saw a guy already with a bottle of ouzo outside, just down the stairs. So I hope we'll keep it excited. My name is Martinez. I'm the CEO and co-founder of Vivial. Vivial provides Swiss accounts. It's a fintech, but we provide Swiss accounts primarily to online companies, digital companies, and other FIs and sort of complex business models, let's say. That's it.
That's it?
That's it.
But you're so important.
Yeah, keep it short and sweet.
I'm Tim Furland, CEO and co-founder of Let No Pay, which is a proprietary crypto payment gateway system. Recently, I've come up with the analogy of the PayPal for crypto, meaning that we connect with merchants to allow them to receive payments from their customers, and we convert that into fiat currencies for the merchants, so they don't have to mess with the technology, the details, the other issues, compliance, and so on with crypto. We take care of all that for them. We are based in Europe, in Latvia, Estonia, Bulgaria, and yeah, that's it. As well as new companies in El Salvador, Comoros, and Switzerland. We've been working for more than 5 years, and over the last 5 years, we've processed more than $10 billion worth of payments for our customers, and hopefully we like to think that they're very happy.
Hi everyone, I'm Flodini Tsiku. I'm the Chief Operations Officer in eCombX. eCombX is an electronic money institution regulated in Cyprus, and we have many services under our business model, which is from acquiring to issue IBANs, issue cards, and different other alternative payment methods in our platform.
Hello everybody, I'm Jose Marti, CEO and co-founder of PayPaga. Tim, very similar to what Tim does, but fiat first, and then we use crypto to settle to our merchants. We built the company about 3 years ago, and we cover right now 9 countries in Latin America, moving slowly into the north of Africa with Egypt and Morocco. But essentially what we do is that we offer European-based companies the ability to process in Latin America as if they were locals. So with all the local rails, whether it's cash, bank transfers, or the local digital wallets of each one of the countries, always at layer 1. And excited to be here with this amazing panel.
Hi, good evening everyone. My name is Ayo, CFO at Cora. So Cora is a payments infrastructure. We power companies, giving them the ability to do collection, disbursement, and also settlement through fiat or stables. We have a large presence in Africa, and we're building globally as well. We work with both local and we also work with global companies to ensure they have the rails, at the best pricing, best infrastructure, best support, across the countries we operate in. Yeah.
Thank you very much. Thank you very much for the introduction. So we have Swiss fintech. We have crypto rails, EU EMI, LATAM emerging markets, Africa infrastructure. So based on your experience and knowing where the payment is going, what do you think, which model will be dominating more, let's say, in the next 5 years? I don't know which one of you would like to start.
Let's just go down the line.
Let's do that.
So I think there's no silver bullet. We do see, I don't know if I'm talking to the microphone or to you guys. I think there is no silver bullet into which rails and which regulation is the best. I think there's no one single answer. We see that obviously stablecoins are a big deal now, and especially in developing markets, it's a good competitor to this segmented sort of APM kind of solutions. In terms of more global business and business to business, we still think that trust is the main thing. So people still try to gravitate towards established players in established jurisdictions. Obviously, those will have to, or are already, interfacing with stable coins. You see even big brands like JP Morgan and other global correspondent banks offering their own either deposit coins or stable coins. So I think it's always going to be a mix. I think that for retail-facing products, you're still very much going to have local solutions because retail-facing products require local licenses. And those local licenses then drive certain demands, and so you end up having to acquire that. Then you've got big blocks like EU EMIs where you can passport them. Fantastic licenses. There's always regulation developing where actually they're not seen as this newcomer. They're gaining access to the central banks more and more. So I think there is no silver bullet, but I think it's always going to be a mixed bag of various good, trustworthy solutions, like the one that LetKnow has.
Speaking of global fiat players, look at Bivio.
What is going on here?
Yeah.
Selfless promotions. From our perspective, from the crypto perspective, obviously we are leaning more towards the cryptoverse, if you'll call it, if you'll allow. But what we see is an ongoing progress, mostly on the B2B side. I agree with Martinez that from the retail side, from the client-facing side, on that side, there will always be, I think, the trust issue, the local accessibility issue and things like this. But with B2B businesses, there is a strong trend towards the decentralized currencies, having access to them at any time, being able to send them wherever you want, not having necessarily a middleman deciding whether you can send it or not in most cases. So we see if you look at the stablecoin market, it's in the trillions now, whereas people were saying, oh, it's a fad, it'll never work, it'll last 5 years and it'll be gone. It's becoming a mainstream payment system for commodities, for shipping and things like this, as well as real estate across the globe. So I don't think it's going anywhere, and I agree with Martinez. It's going to be a mixed bag, and I think it depends on the market, the people who are using it, whether it's retail, whether it's B2B. I think that's going to make the decision on, 5 years is, I think, is a very short-term view.
10 years.
10 years, 15 years, we'll see, I think. Well, what we've already seen. MiCA licenses in Europe have been applied for by a lot of banks and EMIs because they want to join the market. They're in more of a, if you can't beat them, join them mentality at this point, and I think that's going to continue. I think it's going to continue.
Yeah. To be honest, I do not believe that a single model of services will dominate the global market. Although specialization is part of the trend on our industry, customer experience, and I would go a step back, customers, what they need solutions that will be easy to integrate, no complications, not too many providers. So at
frictionless.
Exactly. So at the end of the day, I believe that companies that will be able to follow the market trend and the customer experience and will be able to gather all services under one closed loop integration and one easy flow of login, let's say, and it's going to be just one login, all services there, seamless experience will be the ones that will dominate the market. The ones that will stay a bit fragmented on a small service, either they're going to be absorbed by the big fish, or they're going to be, they will try to find other ways of self-promoting their companies through other B2B transactions or B2B payments.
Oh, yeah.
So I think there are two words that most consumers and even businesses are looking for when it comes to payments, to kind of summarize it, right? It's trust, and behind trust there's reliability, stability, good user experience. I'm putting everything together into the word trust, and speed, right? That's why stable coins are fantastic, right? When you send a payment, they receive it in 30 seconds. I've had issues sending payments from PayPal to another payments company in the EU for 6,000 euros, and it gets stuck for 3 days. I've sent over $1 million in USDT, and it's in 30 seconds. So the speed part is great. I agree with Tim in the fact that trust is what we need to start gaining little by little. But Brazil came out with something called Pix, okay? I'm sure you've all have heard of Pix. And I think that is where we are going. Something that is trusted because it has the backing of the Central Bank of Brazil. And speed is so important that, for example, Mexico has Spay, which was invented or launched 8-9 years before Pix. But why did it not have the adaptation that Pix had in Brazil, where 93% of all adults in Brazil use Pix? Because it has an extra step that Pix doesn't have. So it's not as quick as getting a QR code and sending the payment. So I think we're going to see more and more. Colombia's copying it with Breve. The European Payments Council is studying Pix for a reason. So I think we're going to be seeing more Pixes, let's put it that way, for EU, for Colombia, which is next to it, for Argentina, etc., where it's going to mix the speed of stablecoin and the backing of fiat and central banks. That's where I see it.
Thank you very much.
So for me, what I see, there is not going to be any dominant mode. But what we see is going to be, as I said, retail in each country. They have that specific, payment methods that are specific to different countries. And what we're trying to solve for is convergence. So again, the customer does not really want to care what method you are using. All they want to do is do a payment that solves their problem, and then have that. All the merchant wants to do is get that settled as fast as possible where they want it. So again, I think what we're going to see is a lot of convergence. PSPs or payment service providers offering boutique services in different regions, and also having settlement that is seamless. And that goes to the speed is mentioned, which stable solve. So again, there's really no payment service providers. We've seen even the big guys are now going on the stables as well, because that's the fastest way. And that's, it's fast, trust is being gained now. And so but again, there's still going to be that convergence whereby somebody has to ensure that all the unique payment methods across the different regions, across the different markets, are offered to the customer in a one API, solving all their payment problems.
Thank you very much.
Yeah.
My next question was focusing more on the local payment solutions. I wanted to say alternative payment solutions, but not anymore, because it's a local payment solution. Because the narrative is, and I think Tim also, Tim, I apologize, not Tim, Jose. I apologize, Jose confirmed about the Pix and how big it's becoming. So the narrative is that they are becoming Africa and Latin becoming more like the future of payment growth. Do you agree with this narrative?
I agree 100%. I think we can't, at least for LATAM, you can't see LATAM as I can't speak on Africa because you're the expert there, you'll tell me, but at least in Latin America, right, you have Brazil and Argentina next to each other, and it's like two worlds, two different regulation, two different types of cultures, right? So it's difficult to, or it's a mistake sometimes to see LATAM as one region.
Yeah.
And I don't think I think Pix was revolutionary, right? I don't think it's necessary that LATAM is becoming the future or growing a lot in the payment space. I think Pix was revolutionary, and that's why Colombia just launched Breve with the help of the Brazilian government, right? To copy that business model. And I think the more and more in emerging markets, we're going to see this, and in already stable markets like the EU, right? With SEPA Instant, right? But perfecting it.
So I think while LATAM and Africa is having this huge innovation, is because of the unique problems that each market face. So those unique problems have caused serious innovation because, again, the customers in this market also want to be served. I'll give an example. Uber is going to come on a plane in Nigeria. They're going to play in Kenya as well. The customers want to be able to use Netflix as well in those countries. We want to be able to sell our local products as well abroad. And the infrastructure in, say, in Europe and in US is different from the infrastructure we have there. A good example, we look at the telephone lines network. So in Europe, in US, the lines were already connected, wires, everyone was connected. But when telecom had to come to Africa, there were no lines. The lines were limited. The infrastructure to get to places were not there. What did people have to do? Satellites. And then mobile phone just penetrated everywhere through the satellite to the GSM. And then we are seeing internet penetration as well. So because of this, there has to be innovation. So that's why it's looking like as if the markets are far advanced. But what is going to happen at the end of the day is that everybody is going to learn these different methods. You have to partner with local players to learn the different methods. You're going to have to be able to offer your customers in this market these different methods as well. So, as much as tables are growing, we still need to use these local methods to on-ramp these players. And you have to give it that these countries, these regions have numbers. And these numbers are a source of growth as well. And these numbers are being connected to the global economy. And so you need to use these innovative methods to be able to onboard them on this global economy to serve them with this value. So again, they might not be the forefront. All we bring is innovation. And then at the end of the day, it still goes back to that convergence. Everybody's going to be able to have to offer those payment methods to their customers to get into those markets as well, and then look for a way to merge them to the global economy as well, and also be able to add value. So the value is not going one way. It's not going from the global economy here. It's also going from there as well to the global economy, because there's going to be that need.
Thank you very much, Ayo, for confirming. So they confirmed about Latin and Africa. What about you guys that are building in Europe? Do you find after what you are hearing this, maybe you wish to penetrate these markets, or you think that it's a threat, or it's both?
No, it's an open market. I think all of us here are global players. There's nobody focused on just Europe. Europe is a market that we're trying to expand on. MICA allows passporting, where before there was segmented requirements where Germany would not allow you to do anything there if you didn't have a license there. France the same, Italy, wherever you went, there was a new regulation, a different regulator that you had to deal with in order to do that. Our company is in LATAM. Our company is expanding into Africa with companies like these. We work with Pix. We work with other, you can call them APMs, alternative payment methods, or local payment methods. Either way, the idea is that you're connecting with those local payment solutions in order to reach your customers, which are merchants for us anyway. You're reaching the merchants' customers and allowing them to pay in their local currency and with the payment systems that they're familiar with, which opens up more doors for your merchants, which of course grows your business. But one thing I wanted to mention as far as stable coins is that all of those APMs, when you engage with them, if you want settlement that's not in the local currency, they're going to offer you a stable coin. So stable coins aren't just like for interactions with end users, it's for those B2B connections as well, for settlements and things where other currencies might not be available.
Thank you very much. What do you think, Fotini?
I agree that the truth is as many as any local payments or alternative payment methods you have on your on your platform, as many collaborations as you do, you offer more services to your merchants. So either coming from LATAM or from Africa or from any other jurisdiction, I believe that at the end of the day, I go back to what I answered before. Customer needs, it's market expectations is what you need to put on your platform to be dominant on your industry. So yeah, I think it's good to have different methods in Europe as well.
What do you think, Martinas?
As a company, we service almost exclusively global companies, and even a 5-person team now is a global company because everyone's distributed and targeting different markets. But I mean, tomorrow will be something else. Yesterday it was Bitcoin, tomorrow it's USDT. USDT is gonna not be so popular, so it's gonna be USDC because maybe the access is getting limited by the European Union. So it's constantly changing. We are kind of agnostic to that. I mean, we see, if you take a big pie chart and you see, okay, today, what are the main flows? It's still very much, dollar, euro, the big reserve currencies, and then stable coins. That's the reality, at least what we see. Of course, if you're targeting a market, you need that local, whatever it's PIX or in Switzerland it's Twin, very similar solution. You need to have it. You cannot not have it in order to capture that market. So again, it depends what kind of services you're providing, what you need. I think as a retail-facing brand for a lot of, especially here, Forex brokerages, you need to be able to offer that. I see statistically that even there the stable coins are growing quite rapidly, but some of these domestic clearing systems are just unbeatable. I mean, it's a QR code, you scan it, it's instant. Even with stable coins, there's still a delay, there's a UX problem. I don't think we're going to get away from these local clearing systems, especially when they're supported by the local central banks and the regulation. But for this global sort of settlement network, where we are trying to position ourselves is in a place of stability. So Switzerland, 100 years, hundreds of years, people have kept funds there, and then we'd like to take those settlements and whatever the main reserve channels are, whether it's stable coins and USDT or USDC with great partners. That's it.
Mm-hmm. Thank you very much, and I'm happy you mentioned what merchant needs, because my next question would be, we are here at IFX Expo, you came, you all offer different solutions, but at the same time you are compatible with each other. Some of you offers the takes, so it's no longer competition but partnership, because the service providers are consolidating. So my question is, because there are a lot of merchants here, not just Forex, but other high-risk merchants, what do you think, based on your experience, that they need today in order to find the right partner?
Get a good license. No, I mean, it goes both ways. I think it goes both ways. You're looking for strong...
because they are looking for partners
for strong partners, but then, vice versa, the solution providers want to work with merchants that are there for the long game. And also take care as well to be responsible from a regulatory perspective, because then it's easier to service as well. I mean, we see, especially in the financial industry, that every time there's a regulatory change, then everybody runs to as far away. Well, some run as far away to even further away islands, and some try to actually invest into regulation. Long term, I think that those that invest into infrastructure and regulation end up sticking around and having a good business. Sometimes you do. Of course, I understand you have to react and continue servicing customers, but yeah, I would focus on yourself first. Try to be in a position to then find good payment routes. And I think the solutions are out there. I think, I mean, just looking around the expo here, there are plenty of solutions. But I think some of them are simply inaccessible to some of the merchants, simply because they themselves are not set up in a way that they can be serviced. I hope that was not too weird of an answer.
It was almost clear.
Yeah.
From our perspective, what we see coming from the crypto side, education is one of the things. I don't want to say that merchants have to be educated, but they do need to have an understanding, and that information isn't always readily available for them to actually appreciate the technology that's behind cryptocurrencies, stablecoins. The blockchain itself is a mystery to people. If you just show them a calendar and say, you can never change what happened on that day, you can't go back and erase it, it's going to be there forever, that's the blockchain. It's just as you go day by day, transaction after transaction, it's there. You have banks adopting the blockchain for their own internal structures and things. And I think that if they understand how it works, they'll understand the risk level that's been presented by the media, by governments, by central banks. It's unreal. The product itself is safe, it's reliable, it's transparent. The use of it has been abused, but they just need to have an understanding, and I think that will come out over time, and that will help to promote the reliability side of the crypto side, which will let this decentralized economy bloom a little bit more in conjunction with the traditional industry.
Thank you.
If I may add to that, I mean, you see that some blockchains, especially, I mean, some issuers, let's say on the stablecoin side, I think if you compare USDC versus USDT, there is a trend towards USDT, but I think from a regulatory perspective, USDC is much more established. So there are also risks associated with, I mean, counterparty risk, but generally, also the market drives demand. So it's if everybody goes for USDT, you can want USDC all day long, and you're going to go where the market leads you sometimes.
Well, you have sometimes a closed market like the EU, where the central bank and the rest of the regulatory body says, no, you can't have USDT anymore.
Yeah.
You can only have USDC, and only with an EMI license now. So go ahead.
I will answer a bit different. What our customers needs, why we are here and why we are at the expo. I didn't want to speak about EconBX, what we're doing, but one or two things that are very important for us is because we're in the market the last 8-9 years almost. What we see is that our merchants are loyal to us. And I believe that having loyal merchants, it means that you are not faceless, which means that we have a good customer experience, good customer service, which means that, so it's like a snowball effect. If you have a good product, you have a lot of solutions, you have a lot of, you have a nice user experience and user interface for your customers, and a platform that can have multiple options of services. The next step is to have a good package of customer service, to be loyal to your customers, and to understand their needs in order to be next to them, because we have seen the last 9 years a lot of regulations changes, it's become like a burden to our customers and also to us. But at the end of the day, we need to follow what they want and what we need to do in order to be here for the next decade, and what we need to provide them in order to grow their services, and it will come back to us growing our services. So I believe that be next to your customers when their regulations changes and be able to adapt those needs is what, at the end of the day, what becomes crucial to our relationship together with our merchants.
So being a processor is not enough. You need to be proactive and more consultative.
Exactly.
Thank you.
I loved how you started and you said that we can, in some cases, be competitors but partners at the same time,
Yes.
right? And I like to call them frenemies, right? For example, I mean, I'm going to speak with Tim later about stablecoins for sure because we do all the settlements in stablecoins. So sold me. I'm sold. I think it's really important to give to your merchants speed and trust, like I said earlier, but it's expertise, right? So we specialize in Latin America and we consider ourselves experts in Latin America. And what we need to do is make sure that our merchants who are not or haven't been in this market for a very long time, if they don't know the ins and outs of the markets, to know that they're in good hands with us because we know it, right? And there's no expectation for them to know what are the top 3 payment options in Colombia, right? But we will let them know, guide them, and give them that local expertise. So even though they're processing at a cross-border for their end consumer, it seems like they're paying a local company, right? And I think it's really important to partner with the right people as well. When we're ready to go to Africa, for example, I'm gonna speak with Ayo here and maybe use some of his methods, right? Because he's a local expert in that market. And I know that when he wants to go into Latin America, he's gonna be writing to me for sure.
I definitely will get his card, yeah.
But I think being experts and in the markets that you operate is really, really important to the merchants, to give that trust to the merchants.
Yeah.
Thank you.
I mean, there's a term that HSBC coined a while ago. It's called glocal. So they're not just like a global company. They go into the cities that they operate in and then offer local product. And I think that's what you have to do for your merchants. You have to understand the markets, which is what we've just been talking about here. That local expertise is very important. When we want to go into any African country, everybody can call Africa like, oh, Africa. Each country in Africa is a unique experience. So anytime we want to go to an African country, we send boots on the ground. We work with partners there. We understand the market. We integrate directly to the main rails in those countries. And what that does is give our customers stability, give them the best pricing, and allows us to be the infrastructure for a lot of big merchants. And so that's it. It's expertise of the markets. It's not assuming what the market needs. It's actually going there to find out what the market needs. And that's the only way you could, serve your market as a payment provider. And it's also being open-minded. It's what made us to be, heavy use of stables. Again, you cannot serve a growing market without being innovative. And that's what stablecoin does, limits that friction and gives you the ability to serve them, give them access to services, that, hitherto they didn't have in their own way. So yeah, I think it's expertise. I think it's foot on the ground. I think it's partnering with the right people and not assuming you know the market without doing your proper research. Yeah.
Thank you very much.
He said exactly what I wanted to say. He just said it much better and explained it much better. So I couldn't agree more.
I hope also the merchants are taking notes here. I have 2 more questions and I'm trying to be cautious with the time, but one is regarding regulations, because I already mentioned twice, and I want to bring it up because let's face it, we are all in payments, and the biggest force that is shaping the payments is regulations. So I would like to ask you, do you feel like sometimes regulations holding you back from going global or to expand? Or do you think that it's just what it is and the serious players need to learn how to operate within? How do you navigate with these regulations? We have MiCA, you have...
So I think it's regulation is always sometimes it's actually the innovative part, because if the European Union says, okay, now every bank in Europe forces everybody to use instant SEPA rails, that's fantastic. Then you have new rails to sell, for the users to use. But regulation is also for controlling risk. And at the end of the day, I mean, customers need to be protected. Our own money needs to be protected as businesses. And there's certainly a lot of cowboys out there that would like to think otherwise. And I think that there is a reason why certain countries and certain regulatory bodies are considered to be credible, because they have a history of stability, of security, of money not disappearing. So it is necessary, but in order to achieve that, of course, it's always going to be bureaucracy first, and then second, people trying to figure out how to make the second version with PSD1, PSD2, PSD3, and 5 and 6. So regulation is never perfect. The people that write regulation are typically not the people that are actually building the tools and the businesses. They always ask for consultations, but what ends up in the text of the law is often not ideal, and that's part of our job, is to figure out how to work within that framework. So yes, it's a break sometime, but I think it's a necessary break, because even in this perfect world where everybody could have even stable coins, and there are no middlemen, as we call them, or regulation, I mean, it's also not a good solution, because grandmother will lose her keys and no more savings. So it's, again, a mixed balance, and I think there's a need for regulation. I think there's a need for stability for business to thrive, and then there's also sometimes a need for innovation, where new laws have to be passed to actually to encourage innovation. So
Thank you.
that's my monologue.
Again, almost clear.
Yeah. Very good.
The question being, do we feel that regulation shapes the market and the industry we're working in? Yes, absolutely. You can't live without the regulation, as Martinez pointed out. But I think that they could make much better regulations and the laws that support that, with more interaction with the industries that they're trying to regulate, as opposed to people in back rooms trying to decide how to make stable coins function properly without any understanding of what blockchain is, or a stable coin, or how it could be used for good. Yeah. So there is a massive restrictive result that comes from regulation that's done without that interaction. And we've seen that in MiCA. We saw this from the EBA no action letter on stable coins, that everyone gets a MiCA license thinking we're covered for everything, and then they throw the dice and they're like, surprise, you don't get to touch stable coins unless you have an EMI license. So this kind of uncertainty is what makes markets like this, I won't say dangerous, but scary for newcomers into the market. What are we? Merchants? Something like that. Providers.
We are providers.
Providers who have been around for a long time. We're more stable, but it still shakes us up, because it requires a lot more resources to have to back up and do something over again, which wasn't expected. If you're building something for 2 years based on a specific regulation, and they change the regulation at the last minute, it's very upsetting. I mean, we want to continue going, so you have to spend the money, spend the resources, spend the time, and get back in line with what they want. But that's where we see the market being shaped by those regulations.
Thank you very much.
Truth being said is that I will start as an EMI. As an EMI becoming among the first EMIs regulated in Cyprus, we had, it was a roller coaster of emotions, I would say, the first few years, because regulator was trying to understand what this fintech is all about, what EMI is all about. However, 9 years, almost 10 years later, I would say that now they can understand a bit better, definitely what we're doing. they try to get more practitioners for consultation, which is very good for us because they can understand better the technology behind simple, no apostille documents. So you start from the basics, and then you go to blockchain, and you go to Mika or Dora that is coming now. So regulation is there to protect us as a providers and therefore to our merchants and our customers. However, if they are open to workshops with practitioners, and I believe that it's going to be, we will give them more knowledge on our industry and where we see the future of fintech going forward. And from their side, we will get the inside knowledge of what all the directives are written about. So yeah, I think it's something in the middle.
Thank you.
I'm going to go back to what I said earlier about expertise and why when operating in Latin America, it's really important to have local expertise in each one of the markets.
Because it's by market rules.
By market, it changes. It's not encompassed in the whole region, and it changes from one day to the other, right? So I think it's really important and to have that expertise, to have that trust, to have the people, because we need to adapt and to new regulation very, very quickly, and help our merchants adapt to it as well. I'll give you a quick example that happened in Brazil with the taxing of the IOF, which is a tax that you have on international remittances. So anything, even if you're a Cypriot company in Brazil, any transaction is considered an international remittance, so you pay a tax on that transaction. It's called the IOF. The IOF historically had been 0.38% of each transaction. Yeah. From one day to the other, without notice, like with no notice, they went from 0.38 to 3.5%, without telling anybody. And we're not talking about the money that it costs, but it's the type of reporting that you need to do to the central bank to take all those transactions out, right? They changed that all up. From a Thursday night, I woke up Friday morning to the news. It was incredible. A week and a half later, they said it was unconstitutional. So they brought it back for 3 days for 0.38%. And then for the following week, they said, okay, 1.1%. And they left it for 1.1% for a week and a half.
But now it's back. Now it's 0.38.
No, 3.5% again, right? So, and all this happened in 1 month. So how do you adapt? How do you adapt your technology? How do you adapt your reporting and locally? So expertise is extremely important, extremely important to be able to adapt and do things correctly for yourself, but for your merchants as well.
Thank you.
Yeah, I mean, to follow from Jose's point, when you're building in this kind of markets, you have to be flexible. I mean, it's the changes are very, I mean, for regulation, for us, it's two ways, you know. Now, there's the good side. Regulation, as we've all said here, it guides us. You know, it also protects the business, and it helps. You know, it also gives some kind of structure to the markets, especially when you're dealing in markets that are still developing. We need some structure. But I think we also need to see regulation also harmonize. When you are in Africa, you're dealing from one country to the other. It's different regulation. The process you're doing in one country, you have to do it in another country. So if you have a lot of harmonization, it will help a lot. A lot of passporting will help a lot, you know. I think a lot of also learnings from one another, you know, it will help a lot, because I think even there are things that Europeans can learn from what we've done, and there are things that we can learn from what we've done, so we're not repeating the same mistakes again. And that's the key thing I think regulation needs to advance to, so that, you know, as a business, because again, as we've all alluded here, we're all playing on the global stage. No one can say you're playing here and you're playing in your market alone. You have to play on the global stage. And so at some point, you don't want to be repeating the work. It's a lot of, you know, work for business. But again, like I said, in our own markets, flexibility is needed. You also have to have relationships, you know, relationships to know what the changes are, to understand what the changes are, to be able to give your customers insights into what the changes are, and so that nobody is caught flat-footed, nobody is caught unawares. And also the intention of the government, the intention of the regulator is also passed across. And so, yeah, that's the way we see regulation.
Thank you very much. I don't think we have time for my last question, so I'm just gonna wrap it up. The main question was, who will power the future of global payments? And I think, yeah, okay. take a line here.
Me personally.
But I think the answer to that is, as you all said, that it depends where you are sitting at the world, what you are building, and who you are building it for. And I think you, and also including me from Payable, I think we are all trying to find a solution for the biggest fundamental problem, is how we move money cross-border, quickly, reliably, and at a cost that it will make sense to us as provider and to the merchant as well. I think we all agree on that?
Yes,
Yeah?
absolutely.
Should we vote?
Yeah.
Okay, so I thank you very much for the participation from this panel. I think it was very, very interesting to see from different kind of providers what they are struggling with, what they are going through regulation, where they see the payments going, and also for the merchants that they are looking for a reliable provider, that they are looking for a consultant to have their business grow. So thank you very much, and thank you for the audience as well, and I'm wishing you to enjoy the rest of the FX. Thank you.